When you can actually see your profit for the year in dollars and cents, it gets you more in the notion of selling corn, knowing that I can lock in a $50,000 profit or whatever the profit is. You want to lock it in. If I know I can make that much profit in a year, I will be in business next year.
Good afternoon and welcome to GrainTV. It's June 20th, 2013. To my left is Logan Burgess and I'm Brock Shimbino. We had a negative day across the equities and the agricultural markets today. Let's turn over to fire tip to see how we ended in Chicago. Corn for the old crop was down 9 cents. New crop was down 10 cents. Old crop soybeans off 25.5. New crop down 25 3/4. Wheat in Chicago off 6.5, and Kansas City was down 2 3/4. You know, Logan, a lot of what I think is driving the sell-off here in the commodity markets is coming from what's going on in the equity markets. We've seen the Dow off about 3%, the S&P off over 3.5%. Crude oil is down about $3.50 right now. Gold is down over $100 an ounce. You know, and something really driving the commodities, I think, is a strong rally in the dollar index as well.
Yeah, you know, it seems like yesterday's announcement from the Fed kind of got this whole ball rolling here. And yesterday the Fed came out and hinted at plans to taper their bond buying program here over the next several months. So that certainly got the market a little bit concerned. As we know, the Fed's bond buying program in general has really propped up markets here over the last year or so. You know, as it relates, though, more specifically to the grain market, I think you have a great point. We did see some real strength out of the dollar index, and we saw some continued strength today. It seems like in today's data, things that were really pushing the market was U.S. jobless claims. Those came out higher than expected, and we had some Chinese manufacturing data that came out lower than expected. So add both of those news events onto what we had from the Fed yesterday, and as you said, we had a lot of red on the board in Chicago. Take a look here at the dollar index chart for the September contract. Here's really the strength that we've had in the last 2 days, and that's really been kind of a deviation from the trend that we've seen here over the last several weeks. Take a look at this big sell-off that we had in the dollar, and that seemed to really support grain prices in general. As we know, when we see a stronger dollar index, in general, we see grain prices back off because we need to take some off of price for U.S. grain to remain competitive on the global front. It highly correlated with export sales, and I think that really was helping things move lower today, in particular for the soybean market. So, as you said, Brock, a lot of red in the outside markets that did spill over into the grains. Not surprised if it kind of continues here for the remainder of the week. Maybe not to this degree, but certainly some weakness here. You know, today, fundamentally, though, for the grain market, we did get the export sales report. Can you kind of break down what we saw there and kind of what's moving things?
You know, we didn't really get a whole lot of surprises out of the export sales report. You know, just running through the numbers for wheat, we saw 432,000 metric tons reported sold last week. That was right within analyst expectations. For corn, old crop and new crop combined, we came in at about 210,000 metric tons. That was right within analyst expectations. Soybeans combined total for this year and for next, we saw about 160,000 metric tons. That was on the low end of analyst expectations. So soybeans, once again, disappointing this week. But let's take a look at the charts we've been following all marketing year long. You can see here the red line is the seasonal pace we need to meet the current USDA projections for corn export sales. The blue bars are what we actually saw this week for export sales. So once again, we did meet the seasonal pace, but for the year we're still running about 8 million bushels ahead of pace to meet the current USDA projections. For soybeans, you know, we continue to see lackluster sales on the old crop. Really over the last couple of months, we haven't seen too many sales actually to speak of. You know, this week again we only saw about 52,000 metric tons. That missed the seasonal pace, but for the year we're still running about 51 million bushels ahead of pace. Keep in mind, we did see corn and soybeans revised lower on the most recent USDA WASDE report last Wednesday, and for wheat we're running about 35 million bushels ahead of pace. So, you know, that marketing year is just getting started, so we are running a little bit ahead of pace on wheat.
Yeah, you know, so a real weakness out of the grain market today. It kind of seems like moving forward here, the big things that the grain market's going to be following, certainly, or keeping an eye on, is next Friday's big reports. We're going to be getting quarterly grain stocks that day. That's certainly going to be a big driver of old crop corn, soybeans, and wheat. And we're going to be getting planted acreage that day, so the new crop contracts will be watching that very closely. Next week on GrainTV, we're going to really break down expectations